Welcome to Ask the Accountant, the podcast that is made for you. Weekly podcast live Mondays from 8:30 a.m., released on the podcast service of your choice on Wednesdays. Your main weekly hosts, Aaron Patrick and Johann Goree. Got something to ask? Submit your questions below or ask during the show. Podcast loading. We are currently getting everything set up behind the scenes, so sit back, relax, and we will be with you in a few seconds. Enjoy.
Good morning, everybody, and welcome to Ask the Accountant. My name is Johann Goree, and I am back from my holidays. Aaron has done an admirable job, and to be fair, probably a better job with me being away, bringing some fantastic guests. But I am back, so that's bring the quality back down to the basic levels we expect it to be. Aaron, how are you, and how have the last 2 weeks been for you?
Very good, thank you. It's nice for you to be back. I was expecting you to actually come along and actually give us a full-blown introduction to who you are. You know, my name is Johann Goree, and because people just forgotten, you know what I mean? It's been so long. No, it's great to have you back, and yeah, big thank you to all the guests that we've had in your stay. It's been a good couple of weeks, to be honest. Busy. I keep doing that whole joke of wonder when January is over, but I think actually we're starting to just about get to there now. So no, I'm looking forward to having a bit of opportunity to actually start working on the practice again and do all those good things and start bringing in some extra features and stuff that we've got planned. So yeah, all good. So yeah, you had a good holiday though, I heard. Do you want to talk about it a little bit more?
I spent 2 weeks on the beach in Mauritius, drinking cocktails, eating fantastic food, and snorkeling, basically. I mean, it was very chilled. I took a few mornings to do some brainstorming for Client Engager because I'd had some ideas the night before, so I just wanted to get those written down before I lose them.
Yeah, a terrible view though, I saw on LinkedIn.
It was shocking. I don't know how I handled the work environment, quite frankly. But yeah,
I'd say.
But yeah, no, it was very good. I've come back. I'm refreshed. I'm recharged. I've got about 1,000 emails to deal with. But I've got a feeling once I've had my meetings with my team today, most of those will be deleted and dealt with already, which is always nice. Always nice when you log back into your QuickBooks for the first time in 2 weeks and pretty much all your bank transactions are auto-categorized. So, you know, and all the invoices have already gone out and GoCardless is collecting everything in. So it's always nice to come back to those simple wins that you probably take for granted on a daily basis, but actually, when you come back after 2 weeks ago, that saved me quite a bit of time. That's quite good. So yeah, I mean, you had some absolutely fantastic guests while I was away. We had Lucy, Sam, and Ariana. I haven't managed to catch up with all the podcasts yet, but what I have heard is been fantastic. Some really good conversations. Was there any highlights, Aaron, that you feel people ought to go back and listen to if they haven't heard yet?
Yeah, I do think Ariana's talk about, I know we've mentioned it again. This is the last time we'll ever mention it, but QuickBooks Connect. Yeah, no, her highlights and her opportunity to see behind the scenes, all that was so interesting. The budget, a talk from Ariana again was brilliant. But I really enjoyed the fact that we had Sam and Lucy on just talking about software and their kind of take on it. It was really interesting from a Sage and Zero power users to kind of understand what they're kind of seeing and everything else. And we dropped we have cool friends as well, didn't we? So yeah, that got dropped as well. So another power user coming in. What did you have a chance to listen back to that one?
I did. Yeah, I really enjoyed that session with Ryan. I thought he came in with a very open mind compared to a lot of power users. Like a lot of power users would have found any reason to say, no, that's rubbish, that's crap, blah, blah, blah. But I think he came in and he was very open and honest. It's like, actually, that's a bit of a game changer there. And actually, that's a threat to Zero or Sage or whatever it was. And at the same time, he kind of went, like with the practice management bit, he said, I don't see the need, but I'm from a bigger firm, so maybe that's the problem. And yeah, I thought it was a really, really insightful conversation to have with him. So if you've not listened to that episode of We've Got Cool Friends, then please make sure you go back onto your podcasts or your YouTubes and give that a watch or a listen, because that was really insightful. And we've got more. We've got cool friends coming up, have we not?
We have. I mean, I don't want to give away too much of what they're going to be. We've got a few teaser trailers coming. We've got 2 in the bank now, so we've got 2 to come in the next couple of weeks. What's the timing going to be? Next week, or no, it's this week, this Friday, isn't it? We've got 1 released, and then the Friday after, 2 weeks after that, we've got another one coming as well. One of them is a cool friend of ours, which is a software company that both of us absolutely get behind, and we're trying to fight for their corner in certain aspects. And another one is 2 of them actually, 2 for the price of 1 on that one. And we get to a company where they really are changing the way that we get to offer services to clients, haven't they? So yeah, we're some great insights that one. So we're looking forward to that. And we've got people in the chat as well, haven't we? Hello, we've got Paul in again. Hello, Paul. How's it going? And Ashley's jumped in, coming in.
I think Ashley's taken the mic because I listened to one of Ashley's sessions last week while I was laid on the beach. He was chatting away with Samantha Mitchum about her, how she's got on with social media and stuff, and it was a really, really good conversation. For anyone that's starting out with social media, wants to understand how someone's done it really successfully in a very short period of time, definitely worth going back and having a listen to that conversation between Ashley and Sam there.
Yeah. And Ashley, reach out if you want to know how we turn it. But yeah, we do. We turn this very session into a podcast. I think yours would fly as well. So yeah, if you want to reach out, and we'll tell you what the secret sauce to getting that done, because the more people who can get access to your sessions, the better, in my opinion.
Definitely, yeah. I mean, I think that's the downside of lives, is trying to find a time when it suits the majority. I mean, we know not everyone enjoys the 8:30 on a Monday morning bit, but it works for us. And then we do the podcasts, and they are listened to more. But the content Ashley's doing on his lives is fantastic. So for them to be in podcasts would be great. Andy Wainwright is in the chat. He's up early. Christ.
Oh, sure. Have we gone an hour late? The clock's back, not forward. I'm confused. What's happened?
Like Andy's just having a mental breakdown from not having me there for 2 weeks to help him with client engagement. Bless him. I don't think he's slept for 2 weeks, so he's probably not got up early. But yeah, it's good to be back on a Monday morning. Starts the week right when you're having a chat on a podcast, isn't it?
It certainly does. And apologies, Ashley, it's already up on the podcast. So yeah, do go and make sure you get into there. 19 episodes up there. Crikey.
Fantastic.
Yeah, we'll have to make sure we subscribe to that. We've got to find a way to make sure we've got all of the podcasts up there somehow. We'll have to have a link tree one day of
let's do a link tree bit
of
top recommendations. I've got an internal one. So we use Notion at the moment, but Microsoft have just launched their Loop, which is their answer to Notion, which looks really exciting. So I'm going to be playing with that probably over the weekend. But I've got an internal page on my Notion where my team can see what podcasts I'm listening to, and kind of what topics they're good at covering. So and I do the same with audiobooks. So if I've listened to an audiobook that I recommend to my team, I then say whether it's good at for strategic thinking, leadership, problem solving, mental health, whatever it is. So if someone's looking at, I really want to develop into leadership in the future, they can go, these are some of the books Johann's listened to and that he likes about leadership. But yeah, we could certainly do the same concept for a link tree, can't we, with podcasts we recommend?
I think it's got to happen, hasn't it? I mean, there's, the podcasts that we have been on ourselves and the podcasts that we listen to on a regular basis. So yeah, let's get that link tree up and running, and let's definitely add those books and everything and those audiobooks that you've got in there, because I think we can really build some good content out of that. So yeah, more people that can listen to these things, the better, isn't it? So it's all good.
Yeah, definitely. If we can share the love, we'll share the love. So Aaron, anything major happened when I was off for 2 weeks?
Well,
the budget does not count. The budget doesn't count. I reviewed the budget one night in the bar and went, I didn't miss anything.
I mean, am I allowed to talk about this thing called QuickBooks Connect for the 5th?
No.
So yeah, okay.
No. You have had your value for money out of that event. QuickBooks hasn't had the value for money out of that event that you've got out of it for the amount of podcasts and videos you've done.
I know. We will stop talking about it for once. But what we can talk about is the fact that LinkedIn Xero has had a few kind of upset moments during that time. So we had the whole opportunity of, well, it was it the day after QuickBooks Connect, wasn't it? So we talked about it on the on one of the in fact, the Cool Friends have just come out with Ryan, wasn't it? We talked about it there a little bit. But that was kind of the biggest news that's come out, only because of people now reacting to it in the way they have. And I know I'm kind of jumping the gun here as well, but we have also got news about some other features being taken offline as well.
Yeah.
Do you want to talk about
let's talk about those. We'll come back to the other bits we've got on our list, but we're on the topic, so let's talk about it. So I don't know if I feel that it's been overly highlighted because of we've just come out of QuickBooks Connect, where they've launched huge new, like 5 new bits of information, where the growth and the direction is really clear. You've then got people like Sage who are making acquisitions, going strength to strength. They've had a really busy 12 months. You've got people like Free Agent who have just been solid for 12 months now, constantly growing gradually. They're constantly improving what they're doing, not making a big single shout about it, but they're constantly there and making the right steps going forwards. And then you've got Xero, and the news has just not been positive, has it? I mean, 800 redundancies, and I don't know if anyone else noticed, but in that statement from Xero, it does say there would be further redundancies in July. Not on the scale of 800, but there will be further cutbacks in July. They dropped a bit of software that they brought, which I can't say I've personally heard of very, if at all.
It was more Australian and New Zealand based, wasn't it?
And then last week, or over the last few days, they've announced that they're dropping Workflow Max. Is that the terminology?
Mm-hmm.
Yeah, Workflow Max is being retired. I mean, Workflow Max is kind of the working paper solution that Xero had over QuickBooks for years. And a lot of us QuickBooks users looked at the Workflow Max and kind of that ability to power your practices workflows with a slight envy, I think. But there's not been any announcements of anything to replace it. So yeah, I feel a belt tightening exercise is being had at Xero. And if I was a Xero super user, I'd be nervous, I think. Redundancies, wave 1 of 2, dropping a couple of big softwares. One's been there for a very long time with no announcement of replacement or like-for-like features being launched. That's after being told that actually we're not going to do XeroCon every year anymore.
Yep.
The message isn't positive in my mind at this moment in time. I'd be nervous about Xero and its future in a time when we are seeing tech companies struggle a bit if they haven't got the financial backing that they need. But yeah, what are your thoughts on Workflow Max being retired, Aaron?
Well, I don't use Xero enough. We have a handful of clients, and I do kind of get jumping in time again. But I thought Workflow Max was more their project management solution, as in projects, as in building projects out and everything else. I didn't know that this was also their whole working papers module. I thought, and I might be wrong. That was separate.
I might be wrong, but
if anyone knows in the chat, please do correct us. Tell us where we're wrong. But I definitely know Workflow Max is a solution they use for their project side of things. So again, whereas QuickBooks, you've got the opportunity to, it's all built in house. Sage has a project solution that they migrated over from one of their bigger solutions, so they've got that in house as well. Free Agent have a project solution? I don't think they do actually, but they're not really aimed at that sort of size of companies. And I suppose, in fairness to Free Agent, they don't necessarily need it. Their whole way that they've built their solution out end to end, it kind of almost has that project solution built in, doesn't it? It's very, very clever in the way that it's kind of hold your hand in terms of the customer. So whereas QuickBooks, Xero, Sage, that kind of traditional accounting method, they needed something to be bolted on. Free Agent has kind of got it already built in, which is cool. So if Workflow Max is their project solution, and
just googling it is a project solution, yeah. So
but
it's
is
talking
it
about
owned by Xero though, or is it? It wasn't an acquisition, was it?
I don't know if it was an acquisition, but it's definitely. No, it's got Xero branded all over its website. So I would argue it's
Xero.
Yeah, probably.
Hannah's come to say today, Workflow Maps can be used for jobs and tasks, and some practices rely on it for their workflow. So it's more of a workflow management tool. It's not their work papers element of it. I think their work
like a non-specific practice management tool. So like it's a CRM. It's what it's what we would use client engager, accountancy manager for to run our businesses and our projects. This is more of a generic one that most businesses will be able to use, because it's not said it's just for accountants, it's for everyone.
Yeah. And again, with QuickBooks, it's that projects area, isn't it, that we would use there. And just to give as a comparison for there. So yeah, I mean, again, it's a blow, isn't it? Because I can't, again, I'm having to kind of think back. Maybe we should do more research on it in first, but that's how little we used it. But I don't recall it being locked behind a paywall for that particular service. But that's normally how Xero do it.
Workflow Max, was that not locked behind silver status? It wasn't a paywall. It was a number of licenses you had status thing.
Again, I know that's where the work paper side of things is. But yeah, I mean, maybe that's correct. But yeah, I mean, I've just quickly Googled it while you were talking, and the first thing that pops up is Workflow Max is dead. So why don't you come and use this solution instead? So scorer, apparently.
Oh, I love some marketing people. They're so on it, aren't they? Like, someone's shutting down the software. Right, we'll have it. Get onto Google Ads quick.
So I'm wondering how they're doing on that intake going forward. But yeah, it's this, and with Fluidly as well, with that being retired. I mean, that's not just affecting Xero users, but I think it was affecting Xero more than anyone else, because it was part of your tool set, wasn't it? And this is the problem when you're not owning all of the solutions and you're using third parties. When you do use third parties to build solutions and integrations to your project, it's amazing because they're almost instantaneous, aren't they? You can announce on XeroCon or wherever you want to announce them that you're going to have this fancy new solution, and literally it could be live the next day because they flick a switch and it's open to them. The danger is, and what's happening here is that, when times aren't quite as good and there's kind of cutbacks and everything else, well, that's when you start losing functionality. And that's the danger that Xero are in at the moment, because they need to be making sure that they can keep their current users happy. That's the most important thing for them. But if they're going to lose functionality, that's going to really impact what people or their users are going to do. When you're taking away projects and you're taking away cash flow forecasting tools, then yes, majority of the time, that's an additional paid for service, and it probably wouldn't affect every single practice or every single client out there. But a lot of practices were starting to really take that up as an extra cash flow tool, weren't they? And an extra service to provide. Yeah. Without Fluidly, you've got no low cost entry for cash flow forecasting, which you do have in the other tools we've just mentioned, Sage, QuickBooks, and I think Free Agent got cash flow anyway. I think there's a solution in there. And suddenly you're looking at it, and it's Xero's not becoming feature parity with the competition. I mean, that really does suck, doesn't it? I mean, that's terrible. I mean, we need as a accounting professional, we need the likes of Xero and Sage and QuickBooks to be fighting one another tooth and nail. We need them to be level pegging, because that's what drives innovation, isn't it?
Yeah, I mean, it's interesting. I was just looking at the Learn More page. So BlueRock are acquiring the brand, and there's a note in this saying that, please note, if you subscribe to Workflow Max by BlueRock, Xero will get a cut of your money. which is interesting. So whether they've sold it and to get some money in the bank now, or if it's actually more of a long term, like every time someone pays a subscription, you'll get a cut. I don't know, but yeah, if something was owned by Xero and they've announced that they're retiring it and you're buying it, is that the angle you want the PR on? If you're taking over that brand, I don't know if it is the one I'd want, but yeah, it builds on that image at the moment of Xero are really struggling and they're really having to tighten their belts and find ways to stop spending money and start making money. So yeah, I mean, does that mean we're going to get license fee increases from Xero again soon?
You'd have thought so. And when you think about their recent strategy, again, if we're going back to We Have Cool Friends, made a really good point there, wasn't it? Where the fact that they seem to be going the opposite as well direction. You know, with Sage and QuickBooks, they're trying to look at those bigger solutions now. So QuickBooks Advance and Sage are still pushing with their Intact and all those sort of elements, haven't they? And you can definitely see from a, you know, if you're going to look at what their roadmap is and where they're focusing all their energy on, it is the higher market and trying to get into those sort of ones, which, you know, I'd imagine is the more lucrative area. You would have thought is where it's going to go for. But Xero are really still doubling down on the Xero Go and the smaller clients, which I guess is partly due to the fact that, you know, making tax digital is still around the corner, is still something that we should be thinking about. But is that really where Xero's strengths are? Because I still, like, for me, when it comes to the decision between QuickBooks versus Xero, even though QuickBooks Advance is now finally out and it does solve a lot of those issues, I'm still, for a bigger client, I'm still debating. I'm still going through that you know, pie chart and that you know, going through all the tick boxes and everything else. And the decision making is still Xero versus QuickBooks, and especially for the bigger clients, there's certain features in Xero that just work so much better for your big client. You know, your chances of being able to do approvals and everything else all the way through the system end to end. So it just feels weird that they're still doubling down on the lower market when, for me, I feel like they would have a much better opportunity at that bigger market. But I don't know.
I suppose it's how are they measuring themselves internally? You know, so like Client Engager, for example, when we're looking at who we're targeting and stuff, we could target one-man bands and probably sell loads of licenses dead quick, and that's great. But actually, in the long term, that one license here and there, that's not worth high volume in monetary terms. That's not money in the bank. The reason QuickBooks have gone for the advanced option is because they know there's more money to be made. They may not sell as, you know, for every 100 licenses Xero sell to a smaller business, QuickBooks might only sell 1 or 2 big advanced licenses, but the financial revenue behind that is far superior. You know, and like as a software company, we're constantly looking at that model of making sure we're getting the balance between, yes, we want to support all the small firms and the startups, and that's why we've got really competitive pricing tariffs, and you know, we make it affordable from day one because of that. But we know the long-term investments and stuff, the financial stability that comes from either working hard, selling loads and loads and loads of small firms, or getting the big firms on board. So we've got a real goal to keep a real blend and mix of those. So we're supporting everyone, which then supports us financially in the long run. And Xero don't seem to be, they seem to be looking down at license numbers. How can we get the most licenses and the most users on board? Not how do we get the most money into the bank?
Yeah, and again, we're a little bit out of the loop, aren't we, in terms of Xero? But Xero still don't seem to be pushing the partnerships as much, do they? In terms of the accountants partnerships and everything. They're very much what QuickBooks were 12 months ago, where it's very much direct to consumer. I don't know if that's fair to say, but that's what it feels like. If you look at the adverts that have been put out there and everything else, it still feels like they're aiming for that.
I am seeing a lot more Xero lunches and Xero events. to be fair, it's more people going to the Milton Keynes office from what I've seen on social media, which is probably a cheaper way for Xero to do it. Rather than going out and doing days out everywhere. Like I know the Iris road shows out and about at the moment. Free Agent do a lot of road showing. Sage are doing a lot of road showing. That's not a cheap way to do these things. I know Xero have done road shows in the past, but do you spend that kind of money, or do you try and bring people into your head office? I think Xero is going more towards let's bring people into our central hub and give them a fantastic day at our central hub, rather than us go out to
the office, isn't it? It's really like it's an impressive way of doing it, isn't it? It is a kind of...
It's in Milton Keynes. I mean, it's not Victoria Street in London, but I think it's a very interesting time for all software companies in our industry at the moment. Just watching who's doing what and how, engaging how they're getting on because of it. It's probably been a bit stagnant for the last year or two. So actually, I mean, it was stagnant. Then we had a huge injection of all these new startup software companies at the end of COVID, forms of like Timworks, Armalytics, Cresco, etc., all coming in for the first time ever. Then we seem to have got quietened down again, and now there seems to be a bit of for the last 6 months maybe, a bit of a restructuring, a bit of closing down of some softwares, relaunching acquisitions of others and stuff. So it's becoming an interesting space again, that's for sure.
Yeah, and I suppose most of it was down to MTD, wasn't it? And it's and all that sort of why we went through that lull. And you can kind of tell now that the focus have changed, which is for the good, and we've got opportunities to talk about other things. But yeah, hopefully, fingers crossed that the MTD, because we were looking at the MTD and we were talking about it, weren't we, when it happened, when the delay happened, and we were worried about the likes of Hammock, and we were worried about the likes of the smaller companies and everything else. But maybe we should have been worried about long term what it means for the likes of Xero as well. We knew QuickBooks and everyone were frustrated about it, but it was just a oh well sort of thing, wasn't it? Yes, they built the solution, but they'll just have to put it on pause for a little bit and they'll come back to it when it needed. Whereas for Xero, maybe they were like, maybe that was their get out of jail card for the UK market was MTD for it. So and with that going now, maybe that's they've had to completely rethink, and this is where these restructures and everything have come from. So yeah, maybe we've got to open our eyes a little bit to how impactful MTD has actually been. So
yeah, no, I completely agree. Cool. Okay, so that's softwares that is happening. That brings us up to 9 o'clock, actually. That's quite nice. So that's what's happened in the last few weeks. Let's have a chat about some of the things that are happening in the next couple of weeks, Aaron. And we're not just talking about your YouTube schedule. So we are on, what is it today? The 27th of March. Basically the last week for super deduction. And I saw a fantastic article in our local paper, well, almost local, in the Perthshire paper. A farmer in Perthshire has just spent over £80 million on new tractors and diggers. And the local paper are praising him for supporting the local economy. And it's the biggest JCB deal done in Scotland or something. And I'm just sat there going, whoa, check out the super deduction on that. So anyone if anyone's planning to buy pieces of equipment, vans, etc. for their business, get it done by the end of March, because that's when super deduction, the 130% thing, disappears. Aaron, what have you been telling your clients? Have you been chasing them? Have you been pointing things out to them on this?
Yeah, I mean, super deduction was, and when you think about what it was designed for, it was brought in so that we could encourage small businesses to go out there and spend money, wasn't it? It was, look, there's going to be a corporation tax hike coming up. We're going to potentially 25% for some people. Don't wait until that moment to make the payments now. That bring it forward and everything else. And that's what it was designed for. But for a small business, you may never hit that 25% corporation. Or, that's your intention. I'd have thought you don't really want to be paying the 25% as much as possible. So to kind of give the benefit, super deduction worked for a small business. We were effectively getting 25% corporation tax savings on everything we went out and bought, that 130%, as you said. So we've been really hammering it home to clients to try and go out there and if there was a piece of equipment, or if there was some computer equipment, or whatever it's going to be that you were kind of thinking about but not willing to make the jump for, then now's the time to do it. And I certainly have, for our business, we've bought a few computers that's going to help us and speed up things for teams, and maybe upgrading it a little bit earlier than we would normally, because you want to get the super deduction benefit and everything else. I've got a few videos coming out soon, as you said, about videos about the fact that we've got a bit of technology coming in that's going to help us offer new solutions and stuff, and that was all backed and paid for by super deductions. Little sneak peek of it's just there, look over there. So I've certainly been making the most out of it. And I think one of the things that's a little bit kind of, when we talk about the budget and everything else, was that there wasn't anything that came in to replace that. Like, we've had this nice big buzz about it, and if you're a big company, it's going to be the same as it's whatever cost you were willing to spend before, and now you're going to pay for that. Now you're just going to get the same benefits, 25%. So you're 25%. But for the smaller business, you would have thought there'd be some form of incentive out there, whatever it's going to be, just to give that injection to the economy again. Like that story you just said there is perfect, isn't it? Like that feel-good factor, that investment. It's all good. They're making investments. It's not just sat in the bank waiting for the money to think. It's actually been spent on stuff that's going to hopefully help them grow their business and bring them to a higher amount of corporation tax later down the line, and all those sort of good feelings that we have with it. And I feel like we've not got anything to pass out. So the way we're talking to our clients is, please utilize it before the end of March. Let's try and get them in if you possibly can. But it would have been nice to have that conversation of, you definitely try and use it for now, but it's been replaced by this particular scheme. Yeah. We've just got nothing to say about that, unfortunately.
Yeah, no, I think the year ahead from a business tax point of view is going to be quite a plain, boring year. There's not loads of stuff we can or can't do, really. So yeah, it's a shame that it's going away, and it's nice to see that businesses have been taking advantage of it, and not just farmers who are spending 80-odd million pounds on tractors, but all of our clients have been looking at it and taking advantage of it. And it has been one of those that actually majority of businesses have taken advantage of, I would say, rather than, because you get a lot of these announcements from the budget, and it's like, how many businesses that we look after will actually benefit from that?
Exactly.
Or is it just really the big supermarkets and retailers and stuff that will benefit from that because they've got the cash to pour into it? So yeah, no, it's been a very well received and well used thing. But yeah, as we say, make sure you are telling your clients to get it spent by the end of March. So anything they need, crack on. Aaron will probably be in the Apple store for the next 2 days with a shopping list.
I don't think there's anything left to buy. That's my
Had it all. Can we fit an Apple event in quickly before the end of March, please? I need to spend some money.
Yeah, that's my biggest issue with Apple at the moment. But yeah, that's no, my luck. It'll be the 1st of April that they'll announce their solution. So, yeah, there is actually a Sony event for a camera, which is on the 31st of March itself. But that's 31st of March in US time. I can't quite remember what it is. It just falls into, into 1st of April. So.
That's really upsetting for you.
So, yeah, damn it.
Cool. Okay, so
It's super deduction. That's for sure.
Yeah. It's nice that we've had a tax thing that we were quite pleased to announce and tell our clients about, isn't it? It makes a change.
It was nice to have that feel-good factor, wasn't it? It's like not doom and gloom, here's an opportunity, make the most of the opportunity as best you can, and going through there. But I have just to warn people that I have seen, and not for our clients, but for people in one of the groups we're in, that HMRC are looking into super deduction now. They are looking at cracking down in terms of it. So if you are making those payments right at this point in time, then do make sure that you've got the paperwork to back it up. We're so close to that deadline now that as long as it's been ordered and it's all been the invoice date and everything else should be fine. But do make sure that you don't miss that deadline and everything else. So
cool.
They are going to be hot on it.
Brilliant. Before we go on to our next topic, I've just remembered something. Now, I've not seen any articles about this or anything yet, but rumours are circulating that HMRC are quality checking the work of their assessors. And there may be an issue with furlough claim investigations having been investigated and ruled on incorrectly because of the training given by HMRC to their investigators. So I'm still waiting for this kind of to break more, but we have had one case where they've looked at how the investigation was carried out, and they have said the investigator incorrectly calculated the furlough, and actually you were correct. And from what I've been asking around on social media groups, we're not the only ones to be getting that kind of an answer at the moment. So, it may well be worth keeping an ear open for that. But I mean, as accountants, we were having to work out how to calculate this back at the time. So the fact that HMRC are now struggling to train their own assessors to investigate and assess correctly doesn't surprise me at all. Because I don't think anyone really knew how to interpret the rules at the time. But so that'll be one to watch out for in the coming weeks, I think.
Definitely.
Right. More positive news, though. As Aaron has been saying for the last 3 months, when does January end? Well, the good news is April starts next week. So what are we at? Like 2 weeks away from the new tax season.
We are.
6th of April. We're all geared up. You know what's really exciting? In my 1,000-odd emails I need to go through, glancing through them this morning, I've already spotted 3 clients saying, when can I send you stuff? I want it done as soon as possible. Like that's it. To me, that's exciting. That means we've taught those clients the right approach to getting your tax return done, dusted, and out the way.
And are they non-CIS clients as well? Because that's always
yes, they are. All 3 are non-CIS. Wow. That was the bit that really blew me out of the water. Really, was that CIS? I always expect them within days to be piling in all the paperwork. I want my refund. But these 3 clients were non-CIS clients. And it got me thinking, right, actually, we need to start planning the template and what are our plans of action in regards to what dates are we sending out emails, how frequently are we chasing, is that going to be too frequent, is it not frequent enough, etc. So I've got meetings with my team throughout this week to kind of work out capacity and options of how we're going to do it. But I think what we're probably going to do for the first 3 months is just send out a Calendly link and get people to say, right, I want my tax return doing early.
Yeah.
Here's the date I'm going to give you my stuff. And we're going to say, right, well, it'll be ready 7 days later or whatever it's going to be. We're playing with some different softwares and different ideas of how we can kind of book that work in and plan it without interrupting our usual capacity and workloads, because it's great that people want to come and do it early. It means someone's not doing something else if they're doing that person's tax return they'd normally do in January. So we just need to make sure we get the balance right. But I thought, what a great opportunity for us to sit down and go, right, we know what tools and products and updates have been in the last year in our softwares. We know there's improved functionality from HMRC's API for their income figures to be pulled into our tax softwares. So, Aaron, what are you doing? Let's start with Bofix, because Bofix went well last year. What are you doing in Bofix this year that's potentially different, or are you just going to continue and start from the 6th of April chasing clients?
Well, to be fair, it's as you said, it's kind of same as this year. There's a couple of clients that fell through the wayside, and they didn't get the work done on time that we want to do. So we set ourselves a hard deadline, which is the statutory deadline, and we have a soft deadline as well. And we always try and make sure that soft deadline is done. It's normally about 3 months after the year ends pass that we'll get the work done for. And if I look at the kind of percentages and everything else, we were 90%, 80% of the soft deadlines, which was great to see. So we really want to just kind of work back and maintain that sort of percentage as we can. It's interesting you said about sending out the Calendly link. That's one of the ones we've started to look at as well. We've got this whole idea that when we send out a meeting, or when we send out the automated email to say, look, your accounts are going to be due because you've just passed the year end. Well, that's where we're going to ask them to put a book in there and then for their year-end meeting. So it's already in advance. We can then work backwards from there. And that soft deadline becomes actually a hard deadline, because we've then got to actually have it ready for that client meeting going forward. So I think that works really well. One of the things I've seen, again, on social media and through groups and everything, is this idea of having the pre year-end meeting. And it's something we've always wanted to bring in. Like, the idea of it's been great, but we've never really figured out how capacity-wise we're going to make that work. How, from a tech point of view, how do we make sure that we can do that? So that we are really considering and trying to find a way to bring that into line, so that basically, your 11th month, let's have a meeting then. Let's talk about exactly how it's going to be. Your practice like mine, we've already got most of the data already there. Most of it is there. We can have a really in-depth conversation about it. And then the idea would be that then they can, got 1 month to go to kind of put anything in line that might need to be done, and we can kind of clean anything up and make some proper conversations about it. And then when it comes to year-end accounts, but we may not even need year-end accounts at that point, as in a meeting, we might just be able to get away with, everything we talked about on that 11th month is still the same. It's exactly how we are. Here's your updated figures, sign them. And if you want to have a meeting, let's have a meeting. And we're really starting to play around with that. And I think that could be a really positive move for us. How it uptakes with client, I don't know yet, because we've not tried it. But I think from what I've heard, clients from other practices really appreciate that sort of talk. So yeah, that's something that we're starting to move forward to. What about you? You got any kind of any major changes that you're looking to do?
No, I think we recognise the major flaw we had in our system last year was we took our eyes off the ball in August, and we didn't get back onto the ball with it until December, October, November, really. So we want to make sure we're being consistent every month, consistently. Whether we're going to email everyone once a month, or whether we just email in April and then maybe June, and then it gets more frequent. I don't know yet. We've not worked that bit out. But what we have said is we're going to have one person internally designated in charge of self-assessments, and they are going to be feeding back to the leadership team and the client manager team on a monthly basis, saying, this is where we are with our percentage. This was our goal. This is what we've achieved. So there'll be a combination of things there. Of internally, we'll have a monthly feedback to all the client-facing team and the leadership team. So we might say, right, we want 12% of tax returns done every month. We get 3 months in, we should have 36% done. Where are we? We're at 35%. Fantastic. We're at 20%. Okay, why is that? Do we need to get client engagers more engaged and talking to clients? What's going on? What's the obstacles? So we're monitoring and progressing it better that way. But then we're also going to be sending out that first email saying, when would you like your tax return done? Like, give us a response. Give it, like, whether it's going to be a Calendly link or a poll where they can go, I would like my tax return done by this. And we go, right, we'll put that as our internal deadline on our practice management tool. That then prioritizes the work into our team's calendars. like, yeah, a few different things going on there. But I'm excited for the opportunities that we've got to make this a lot smoother for the whole team. And if you've made it smoother for the team, you're making it smoother for the clients by default. So yeah, they're my main thoughts at the moment.
I think the reason we're able to do this, though, and if you think back, is the fact that we're able to. It's tweaking at this point, isn't it? We know that we've kind of built our core systems around the fact that we want it so that data is so fluid as much as possible. You know, the idea that you could pick up any client if they ring up, you could log into their solution and you could have real-time information for them. That's what we've built our systems around, isn't it? And I think we are privileged in that respect, that our clients have bought into that and there is there. But I am still trying to keep my eye on, you know, what about the other world? Like, how else can it be, you know, for people who aren't in that position? And I think, in fairness, again, technology is starting to really help them as well. You know, the idea that we could set it up so, I forget what solution you use, but you have that solution where you can get access to their bank statements, etc. And you've got those.
Analytics.
That's it, analytics. Yeah. And using solutions like that means actually, even if your clients aren't as, you know, on the ball like majority of ours are with the cloud accounting and everything else, but even your, you know, your traditional basis clients, whether it is just, you know, paper basis or whatever it's going to be, there are now solutions for them that if you can get them to buy into those small little changes, so not asking them to completely change their bookkeeping, completely change the way they are, I think then there's an opportunity for you to be able to bring them. And we don't have many of them. We have a handful of them. We just treat them in a slightly different way. And in our practice management solution, we grade them in a different way as well. And what we're trying to do is bring them as a different priority and trying to, you know, put the emphasis on them that, look, this is where we need the information in by. If it's not, you know, depending on the client, like what's the penalty going to be for not providing information by this point? And I think that's the other bit where we're looking at it now is, right, well, how do we've got it smooth for our, you know, our typical clients, but those odd, you know, those you know, more you know, manual type clients, what can we do to help them? And I think at some point we've just got to be realistic with ourselves. Like, is it worth chasing those sort of clients? Are they going to be beneficial for us going forward, or would they be better suited with a practice that would deal with them probably in a better way, because they are, you know, they have the opportunity to you know, deal with them in a more, you know, face-to-face manner, or whatever it's going to be, actually in person, for example. So yeah, it's interesting. We're kind of having to make those decisions now of, you know, what's right for our practice going forward.
Yep. No, I think as you say, like, we are in a privileged position. I would argue we're in a privileged position because we have been adopters of tech and we have worked hard to put ourselves into this position.
Yeah.
But you're right. We are now taking privileged decisions of how do we tweak this to make it slightly better. And, you know, just having that conversation with yourself here, like, I've just written down a few notes of, like, you know, do I do a Google form where someone puts their name and whether they want the start or end of each month? You know, do you want your tax return doing at the start of April? Great. Do you want it doing at the end of April, May, June, July, August, September? Because they're making a commitment to us that this is when we want it done.
Mm-hmm.
We've got that information in. I can go put that into Client Engager as my internal deadlines. That means our team are working on it. We then send out, we know when that comes up, like, right, the client wants it done this month. It's like, right, do we send out an Analytics link then? Or are we proactive and send it out to every single client in April saying, right, we need your bank accounts now. Even if we don't do your tax returns until January, we've got the bank data now. We're ready to go. And actually, we can be proactive, going, you know what, we've got all the information we need for client A, B, and C. Let's just do those clients now. Even though they're not chasing us, they're not asking for it, we just go to them and go, here, we're done. Now, there is a downside to this, and that is, come January, you will field a load of emails and phone calls saying, did we do our tax? Do I need to do my tax return? It's like, no, it was done 6 months ago. But I'd rather have those conversations which end in a feel-good phone call or email going, you guys are amazing, I can't believe you're all over this, than yeah, we're waiting for you. Oh, why have you not chased me? It's like, well, we have chased that. Regardless of how right we are as the accounting firm, it doesn't come off as a positive experience. And it's irritating for everyone in that conversation. So yeah, we're now looking at those little steps now, which is really exciting to be looking at those kind of steps, and just see how we get on, basically. But yeah, I'm excited about the tax year ahead and what we can potentially achieve and how quickly, which is an unusual position to be in, shall we say.
And that's a great segue to, I suppose we should really give a bit of public service announcement of what changes are going to happen, aren't we? Really, what you should be talking about, clients. So really quick ones, because as Johann just said, there wasn't that many to worry about. But the dividend allowance, that's going to be increased in 2023, 2024. So maybe time to think about making the most out of dividends in the next tax year. That's going to be something to think about if you're in higher rate. It goes up to 33.75 to 39. Ouch, 39%. National minimum wage goes up on the 5th of April as well. So we've got to make sure that everyone's in time with that one. Anyone who has company cars, so fully electric cars like myself, then your list price is going to increase by another percentage point. So yeah, it could be a case of thinking about maybe time to get rid of the car, for example, and having conversations like that. And then the big one for us, and the bit that we're having conversations about all the time, is going to be dividend allowance going down as well. So we're going from £2,000 to £1,000, and it looks like as well we've got to have another conversation with clients about what their true director salary is going to be. I think thinking about it like what we're doing internally to let other people know is we're going to ask clients the choice. We're going to send them a Google Sheet form and say what director salary would you like to be paid going forward, just because we know that there's two kind of slightly optimum ways at the moment. So it could be that if they're happy to pay a little bit of national insurance every month, then you are slightly better off. So that would be a recommendation for you. But if you don't want to, don't want that admin hassle having to pay that national insurance, then there's another solution. But also we want the clients to be making that choice going forward. We want them to choose which one they want to do, because what we don't want to do is get in a position like we did with furlough and everything else. And it was like, well, you told me to be on this and now I'm not eligible for, for government help and everything else. So we're just going to ask them and say, look, what would you director salary like to be? Here's two choices that we think would be beneficial for you, but here's a box called other. You tell us what your director salary wants to be going forward, and we let it go from there. And that's a big change for us, because we used to just dictate to them pretty much what they should be paid, but we're going to let them have that choice going forward. So we'll see what that's like, because there's still debates going around on what's the most optimum one to do for clients and everything else. And I think realistically, we should tell them that these are two optimal work rates for you, but realistically, it should be your choice. It's your direct salary. You tell us what you want to be paid. If you want to pay yourself £40,000, go for it. The differences aren't as vast as they used to be.
Yep.
There is an opportunity to just pay them what's right for them.
That's it, and that's the key. What's right for them. I've got a client who could pay himself in dividends easily, but he pays himself 45 grand a year in a salary as a director, pays all the tax and national insurance on it, because he doesn't want to be stung by missing out on things like furlough in the future. But he also had no end of headache. He spent a fortune in extra interest because his old accountant had him on a dividend mainly income. His mortgage broker put him onto a mortgage that would support that. But he's now calculated backwards and gone, actually, I'd have paid less in tax in the last 5 years than I would have done on my mortgage if I'd had a salaried mortgage and not a dividend-based mortgage. So it's working out what works for that person's circumstances every time is what's really important. And I don't think accountants and bookkeepers are always great at that. They just go, this is the most tax efficient option. It's like, yeah, but is it the right option?
Exactly.
Like, it's tax efficient, but actually, does that spike the cost of something else in the future? That client who was earning primarily dividends originally, his interest rates on his personal loans were higher because it was a different income style, which then, he added it all up and he was like, I'd have been 10 grand better off paying tax and national insurance on a salary over the last 5 years than I would have been paying for my loans and mortgages at these rates. So, yeah, definitely something we need to have a chat about with our clients, in rather than dictating what's right, actually talking about it in future.
Definitely. I've just noticed we've got a question coming, but final bit before the question comes in. Conversation topics around capital gains, because we're losing the capital gains allowance. So definitely make sure we're talking to clients about that. And then the final one that is going to have conversations about is going to be corporation tax changes. But hopefully by now that's already been preempted and already been started, because, yeah, some pretty significant ones. I know in our practice there's been a lot of, we're having to restructure group companies, for example. We're having to change a lot of those sort of conversations, but we've already had those conversations. And really at this point, we're just making sure clients are understanding why we made the changes more than anything else. Awesome. Cool. Anything else on there before we move on to the question? I don't think there is.
No, let's get on to the question that's come in from YouTube.
Awesome. Do you want to read it out?
Yep. So as a sole trader with one subscription, I need to have one book royalties and 2 rental income. Normally in one spreadsheet, 2 separate tabs. Do I need a second license? My accountant said I do. So this is for someone under the name of Butterfly. They've got a QuickBooks license that they're using.
Yeah.
So, Aaron, what are your thoughts on this one?
Well, if they're VAT registered, I don't think they would be. I mean, rental income, probably not. So if this was 2 VAT registered, independent VAT registered businesses, then you wouldn't have a choice. You'd have to have 2 different licenses to be able to file it. Now, the fact that there's an opportunity here that they don't need to be VAT registered, and there's potential there that they think they could probably get away with not having a second license by using things like locations and classes, and they could find a way to be able to make this work under one license. However, Making Tax Digital's on its way, and when Making Tax Digital comes around, you won't have a choice. It will have to have 2 different licenses. And also having just the one license means that when you come to the year end and you want to extract that data for your personal tax return, it is going to be slightly more complicated. It isn't just go to the tax section, see what the boxes need to fill out, and off to the races. I mean, it says here that you've got an accountant anyway, so that is your accountant's problem. So, actually, do you care? Probably not. But it is slightly more complicated that way. My personal recommendation for this one is get yourself future-proof. Like, yes, there are workarounds, and I've got a whole video on how to run 2 different businesses using locations, everything else. But what I would recommend is book royalties, have that as a QuickBooks license, and you'll find lots and lots and lots of benefits from there. When it comes to rental income, potentially look at someone like Hammock, having it go through from someone like that. Doesn't necessarily have to be directly with QuickBooks. QuickBooks are releasing and are looking to release a rental first and a property first version of QuickBooks. But from what we can tell and what we've seen so far, it is just a chart of accounts have been updated to be more rental friendly, should I say. So yeah, personally, if this was our client, then we would definitely have 2 licenses. I know it seems like it's an added expense, but I think, for me, having those 2 different licenses will just mean you're ready for the future, and things like Making Tax Digital, you're not going to have to change everything all over again, because that's what. If you're having to make the change now, you might as well make the change now and get the benefit out of it, from my point of view. What about you, Johann? Anything you want to add to that?
Yeah, no, as you say, through tags, locations, and classes, in theory, you could make it work. Definitely. However, I would argue best practice is to have royalties on one QuickBooks license, and the rental income and costs on a Hammock license would be fantastic. The insight you get off that is phenomenal. And they've just said they're not VAT registered. So, yeah, in theory, you could do it on one license and tag every transaction that's coming into your bank with either the royalties business or the rental business. So whether a cost is related to rental or royalties, you put a tag on there, or you put a location on it. So yeah, in theory, it could work, and you could then run a location or a class or a tag profit and loss report and you'll have the two businesses separated. That's fine. But that is highly unlikely to be how it will operate in 2027 when MTD ITSA comes in. However, again, you may well be under that threshold of £50,000, £30,000 income.
Yeah.
So actually, MTD ITSA might not even impact you anyway. So, yeah, if you're not going to be impacted by MTD ITSA in the future, you're not going to be VAT registered, you're not going to go into limited companies, then yes, you could, in theory, make it work with one QuickBooks license.
Yeah. And, you know, if it's all about cost saving, then it makes sense, doesn't it? And if it is about cost saving as well for that license, then you can't use locations because you're going to have to be in a higher version of QuickBooks. So, as you mentioned, there, tax would be your friend there, wouldn't it? Like, definitely. And it could work. And maybe you know, 2027 is a while away, so maybe get yourself comfortable with using QuickBooks. You know, use it for what it's worth. Have that one license for now. Just remember that when it comes to actually dealing with the year end, you know, your accountant's going to have a slightly more difficult time, but it's not the end of the world. Like we have clients like that all the time. So yeah, it's one of those, isn't it? When these sort of questions come up, it's a very much a depends. Like
yeah, her accountant's not wrong.
No,
but in theory, actually, we could probably work a way around it, so that we could do it off one license if that's the saving they're trying to make.
Exactly right. Exactly right. Cool.
Yeah, brilliant. Well, I feel like actually we've done something really helpful and supportive there. So, and they agree best practice is the way to do it. Fantastic. So thank you very much for everyone that's tuned in. Aaron, what have you got coming up this week?
Oh, this week, what was it? That was it. I'm doing a video on QuickBooks Desktop, but it's in the cloud. So I played exactly.
Right.
So I finally had the chance to sit down and play with the QuickBooks Desktop app that's for QuickBooks Cloud in the US. So the idea is they're trying to make it so that it's very what the look and feel of it is very much like it is QuickBooks Desktop. So it is the same left-hand panel that they're used to. It's got a few more features that they're used to. I'm not going to spoil it, but yeah, it wasn't a great experience. So yeah, we'll definitely keep an eye out for that one, because a lot of people are going through that phrase now, oh, move now, having to move, because how long they got left? It's not long, is it, till desktop's completely
June this year
shut down, isn't it? Yeah, it's June, isn't it? So there is a lot of talk at the moment about getting people moved over. So I thought, well, let's go and see what the desktop equivalent of cloud accounting is. And yeah, it's I mean, I had to use a PC for one thing, so that was one of the downsides of it. But never mind. What about yourself, Johann? Anything you want to chat about? Any updates to client engagement? It's been a bit quiet lately. I'm a bit disappointed. You've only had like 3 updates this month so far.
And I had 2 weeks off. No, there will be a video coming out later this week, which will give you an early insight to the email integration that we're building. So we've been beta testing it for the last week. We are really happy with it. There's a few bits of user functionality and stuff we want to improve. The release date is scheduled to be kind of 20th of April, kind of somewhere around there at the moment, providing that we don't break it too much. But yeah, there should be a video coming out this week for me showing you what that looks like. And there's some really cool stuff in there. Like, you've not got one inbox, you've got 2. So you're going to have your own private inbox, and then you can link in the support or the info inbox that you've got, so the whole team can see that, create tasks from it, etc. It's really, really powerful, which we don't think anyone else is doing. So we're really excited by that. So yeah, I'll get that video done this week. I don't think there's anything else due out this week. I'm just going to be spending my time getting back to supporting my team, doing my job, and helping our clients, basically.
Sounds good. Just final one from Butterfly, not heard of Hammock. We really, both of us highly recommend it. There's a video on my channel if you want to go and have a look at that. But yeah, highly recommend Hammock for anyone who's into rental properties. The amount, like Johann said, the amount of insight you get is just brilliant. It's not just a bookkeeping solution. It is actually a solution to help you run your rental property, which, for us, we think is definitely a plus. I use it for my personal rental property, and it's so much better than anything else on the market, in my opinion.
Definitely, it's a fantastic bit of kit. And when you Google it, just Google use hammock, because that will come up with the actual website straight away rather than loads of pictures of hammocks.
It's like Bright software all over again, isn't it? Trying to find their website is an absolute nightmare. That's why Client Engager wins so easily. Like, you just type with Client Engager. There's nothing else to worry about there, is there?
Exactly. But yeah, right. Well, we are running over time, so let's wrap this up. Thank you very much to everyone that tuned in. Thank you for your questions, your feedback. As always, please get in touch and feedback to us anything you want. Reviewers on the podcast stations. Ashley, I have just followed your podcast and given you a 5-star review already, having watched you live on LinkedIn. So yeah, anything else, get in touch, and we will be here this time next week, won't we, Aaron?
We certainly were. Looking forward to it.
Brilliant. Thank you very much, guys, and talk to you all next week. Goodbye.
Cheers, everyone. Bye.